During the interview, Cathie acknowledged her fund's woeful performance but highlighted the recovery, and to further emphasize her conviction, Cathie went on to make a bold comment stating that everyone is wrong about their allocation of funds and over time this will play out in her favor. Let's listen to what Cathie has to say. The most important source of conviction is our research. We are doing research on innovation that I believe no one else is doing out there, at least in the way that we're doing it. We're trying to figure out the learning curves associated with new technologies, how fast the costs will fall and how quickly these new technologies will grow. So the source of the conviction is our research. And the second thing we have going for us, I think we're the closest you'll find to a venture capital firm in the public equity markets, and I think our asset retention, many people think we've seen huge outflows. Our asset retention has been remarkable, and I think it is because we give our research away, unlike most, and we are educating our clients about these amazing growth opportunities. And I think especially well if all demographics, but especially the younger investor, sees the ground shifting underneath our feet, and they've stuck with us. Just one other thing I'd like to do is put into perspective. So with this 5-year investment time horizon, we have delivered north of our minimum hurdle rate of return, which is 15 over a 5-year period. We are down 60% since the peak. However, from the bottom of the coronavirus crisis to February of 21, we're up 358. There's a very interesting thing that's happened in the last year, as our performance was down 60%. If you look at how innovation was priced in the private markets over the last year, up 20%. Think about that. What's wrong with that picture? And I think what's going on is investors in the public markets have defaulted to benchmarks, which are all about the past. They're selling our stocks. Our stocks are not in benchmarks, and we're proud of that because our stocks are the future and they will make up the benchmarks in the future. I believe that this shift towards passive and benchmark sensitive investing, meaning mimicking indexes, which is kind of mindless, is very backwards looking. The stocks at the top of these indexes are there because of what has happened historically. I believe this is the most massive misallocation of capital in the history of mankind. We have ahead of us the most magnificent opportunities because of the massive amount of innovation that's taking place, and yet there's the fear has pushed investors back to their benchmarks. And I think many people are saying, innovation solves problems. We now have a lot more problems. That 358 increase during the coronavirus is because right before it we were slammed because of risk aversion. Once again, everybody going back to their benchmarks, and then everybody woke up one day and said, wait a minute, innovation is going to help us solve these problems, and we certainly were beating that drum, and anyone who got in near that low had a tremendous ride. I feel we're back there again, and now with the Ukraine-Russian issues again, we have many more problems, and certainly when it comes to oil, this is only going to accelerate the push towards electric vehicles. To watch the full interview, check out the link in the description. What do you think of Cathie's thoughts here? Leave a comment. Don't forget to subscribe, and we'll see you in the next video.